NIO just reported earnings. The stock is selling off here pre-market. Let's break it down. So right now it's down 6.99%. It's trading just over $10 a share at $10.25. Now year to date, NIO is up about 14% before the 7% drop. So it's still up about 7% year to date. So over the past year, it was down 44.37% before pre-market here. Add another 7%. It's down over 50% in the last year. And if you look at the max chart, so since this went public way back here in September of 2018. It went public at $9.90, and in pre-market it's $10.25. So basically flat, up slightly since 2018. So 5 years and the stock is trading flat. Is this an opportunity, or is the stock going to go lower? We're going to break it down in this video. I'm going to show earnings highlights. We're also going to look at valuation and look at a chart, and I'll tell you where I think the stock is headed next. So what happened with NIO earnings? Why is the stock selling off? Well, NIO lost $835 million in the second quarter, over doubling its year ago loss. So obviously that's not good news. Deliveries were also down in the period. Now part of the reason for that, NIO is transitioning to new models, and China also has an economic slowdown, so people are buying less cars. And deliveries did rebound in July as new and updated models started to ship. We'll talk more about that here in a second. So revenue this quarter, 8.77 billion won. That's $1.21 billion, and that's versus 9.25 billion won expected. So adjusted loss per share, 328. That's 45 cents in US dollars versus 245 expected. Now these adjusted figures also exclude stock-based compensation, so it gets worse if you factor that in. On a GAAP basis, NIO reported a net loss of 835.1 million or 51 cents per share. So in Chinese currency, NIO reported a net loss of 6.06 billion or 3.70 won per share on revenue of 8.77 billion. Now a year ago, NIO reported a net loss of 2.76 billion won or 1.68 won per share on revenue of 10.29 billion. So look at that for a second. So a year ago, 10.29 billion. This year, 8.77 billion. And then look at the losses. The losses up top, 6.06 billion versus a loss of 2.76 billion. So when we did some previous videos, we talked about how NIO is burning cash, how they have to figure that out. There's a lot of exciting things about this company, but if it keeps burning cash, it's eventually going to get in trouble. And it recently did have to raise some cash. We'll talk about that here in a second. NIO's gross margin on vehicles in Q2, 6.2%. That's down from 16.7% a year ago. Now, with that said, it is up from 5.1% in Q1 of 2023. So NIO delivered only 23,520 vehicles in the second quarter. And NIO was really focused on selling some of their older models, and they had significant discounts to get those moved. And as I mentioned earlier, China's economy has also slowed down. So some positives here. NIO has a few new vehicles, and this is helping. NIO launched a revamped version of its ES6 crossover on its new platform in May. Also a station wagon version of its ET5 sedan in June. Now these new vehicles, the updated lineup, it's starting to drive better results. We've already seen that with 20,462 vehicles delivered in July alone. So numbers are improving there. So NIO CEO Li, he said that this July result was enough to put NIO at the top of China's sales charts for EVs priced above 300,000 won, about $41,000 US dollars for the month. We expect a solid growth in vehicle deliveries in the second half of 2023, Lee said. Now, some other positives here. NIO boosted its balance sheet in July, closing a $738.5 million equity investment from a fund controlled by the government of Abu Dhabi. This was on July 12th. So NIO had $4.3 billion in cash and cash equivalents on hand as of the end of June. So that's a decent number, but NIO is still burning significant amounts of cash each quarter. And we talked about NIO houses. We talked about the battery swap stations. This is very expensive, and they're doing a lot of things to get new customers. The margins are pretty razor thin, and they're burning a lot of cash to sell these vehicles and to get new customers. Now, I'm not here just trying to speak negatively. I'm just speaking facts about NIO. I think there are a lot of exciting things about the company as well. So more positives here. NIO expects deliveries between 55,000 and 57,000 vehicles in Q3, so this next quarter. That's up significantly from the 31,000 1,607 electric vehicles delivered in Q3 of 2022, a year earlier. NIO also expects its revenue for the period to fall between $2.61 billion and $2.69 billion, and that's up from $1.83 billion in the year ago period. So let's dig deeper. Let's look at some more information from the investor relations page. We'll also look at valuation, and we'll look at a chart, and I'll tell you where I think the stock could be headed next. So here's the news release hot off the presses. This is on NIO's investor relations page. And if you're new to investing, this is a great way to get this information on your own. You can just Google the company name plus IR or investor relations, and you can generally find this information quite easily. Now, we broke down a lot of these numbers on the slides already. I tried to put those slides together just to make it really simple, just a nice quick overview. And it's important as an investor to look at this data, look at the balance sheets and understand them. And I do have videos that break that down. If you're interested, drop a comment. I'll point you in the right direction. One thing interesting to point out here is the R&D expenses, research and development. In the second quarter of 2023, this was about $461.2 million. That's an increase of 55.6% from the second quarter of 2022. It's also an increase of 8.7% from the first quarter of 2023. So obviously NIO is going to have to spend money, R&D, to stay relevant, to design new vehicles, also for autonomous and so on. When you look at general and administrative expenses, all right, second quarter. Now this is $393.9 million. That's an increase of 25.2% from the second quarter 2022 and an increase of 16.8% from the last quarter. So again, burning cash to grow the model, to grow the business, to get more customers, as we've talked about on the channel many times. You know, loss from operations, increase of 113.5% if you compare it to 2022. And then if you look at the last quarter, it's still another 18.8% increase. So these numbers are getting worse. That cash burn is accelerating. And that's very important to understand as an investor. I understand the company might be exciting and you want this stock to go to the moon, but understand how it works with Wall Street and with investors, especially in this type of environment. You don't want to see a company that's burning cash and accelerating that cash burn. Now, we talked about some positives on those slides, but it's important to understand the facts. And I try to bring this information to you neutral, not be bearish, not be bullish, and help you make a decision if you want to buy this stock or not. You know, net loss, increase of 119.6%. Net loss to NIO shareholders, that's an increase of 123%. And again, just from last quarter, 27.4% increase just from last quarter. And we talked earlier about the balance sheet and the cash and cash equivalents. $4.3 billion is a decent number, but when you have a loss from operations of $837.7 million in a quarter, you can see that they can burn through that pretty quickly. So share issuance, do you guys understand what's going on here? So this is going back to this RIVN investments, $738.5 million. So what they do, they issued 84.6 million shares, Class A ordinary shares. So of course, you have to pay attention to stock-based compensation, to dilution. So you're burning cash, you're diluting shareholders. There's a lot of negatives here for anybody who wants to invest or anybody that currently owns the stock. And so we've talked about this before. This company is very speculative. It could be a great return, but it's high risk reward. So you could get literally a 10x return or it could give you a 0. And I know some people are watching this, they're going to be upset, but I'm just giving you facts. That's true. If the company can continue to innovate and sell cars and figure out a way to reduce costs and stop that cash burn, this could be a great business. And of course, if you're a bull, you believe that's going to happen. So next, we're going to look at valuation and a chart. I'll tell you where I think the stock might be headed next. Now, before we do that, if you're new here, subscribe to the channel, click that bell for notifications. We're so close to 50,000 subscribers. We just need a couple hundred more. You can help me out by subscribing today. And if this video is helpful, drop me a like and drop me a comment. And I do need to announce that this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. You can also join our private community, Patreon, Discord. We're crushing it in there. We're having a lot of fun. Join us. Visit patreon.com/firedupwealth. So when you look at NIO as a spec stock, you're really looking at price to sales. It doesn't have earnings, not profitable. And so this is on Y charts and it's breaking down price to sales. Now what this does is it goes all the way back to 2020. And you can see it was about 15 price to sales end of 2020. In January of 2021, this spiked over 30, 35 price to sales. and now it's trading at about 2.487, and that's before the 7% that it's down pre-market. And from a valuation perspective, that's not terrible, but you have to remember, if a company is continuing to burn cash, if they don't eventually figure out how to be profitable, or if they run out of cash and dilute shareholders, just because it looks inexpensive from price to sales, it could be a 1 or 2 price to sales, it doesn't automatically mean that it's going to be a home run investment. So next we're going to look at a chart. When you see orange on your screen, that's a previous chart day. We do chart day every single Wednesday in Patreon Discord at 9 o'clock a.m. Eastern. And you can join us live every Wednesday. Go to patreon.com/firedupwealth, join a leader higher. So again, the yellow is going to be today's commentary, and I've got some written up here. So previously, you can see I did a video. I said this stock was going to be a buy, $8 or less DCA, and it got down to $7 a share. Now it ripped from $7 a share over double to $16.18. So this would have been an amazing swing trade. Now, if you're holding as a long-term investment as a spec stock, hopefully you got it at $7 and $8 a share. So your cost basis might be about $7.50, and now the stock is trading below $10. It's actually at $9.62. You can see here in the red pre-market. In fact, the market just opened, so it's trading at $9.69. The market just opened here on Tuesday. I'm going to move this up here. You can see this is the S2 where I've got this red line, and it broke past that S2. That S2 is at exactly $9.73. Now this S3 below here is at $7.45. And I'm not saying it has to go to this R3 at $7.45, but that is a possibility if it continues to break down. If the market rolls over and sells off hard, these are going to get dumped. These kind of stocks are going to get dumped. These speculative stocks that are burning cash, they're going to get sold off harder than the the rest of the market. And you could see it come back down into that range that we liked earlier between $7 and $8 a share. This is why it's important if you're buying stocks. It's important not only to understand what you own, the conviction of the stock, but also try to buy stocks at decent prices. Don't chase them. We've been talking about here the last several months. No FOMO. So back in May, we liked the stock when it was $7 and $8 a share. When people were looking at it chart day after that, we said, don't chase it at 10, 11, 12, 13, 14, 15, $16 a share. Now you wait for it to come back, and maybe this is an opportunity if you're bullish on NIO longer term. And of course, it's possible that the market maybe wants to hold this at $10 a share. It might have gone slightly below that S2, and it could hold up, and it could pop above $10 a share and go higher. But do understand the downside risk and the possibilities. But remember, stocks like this do have risks. These are generally considered speculative investments, and they're going to give you high risk rewards. So they could give you significant returns on the upside, but they also could lose you a lot of money, and they could even go out of business on the downside. So keep that in mind. If this video is helpful, guys, make sure to drop me a like, drop me a comment. Let me know what you think. Have a great rest of your day. Take care.